Hello friends, my name is Deepak Singh. I am a finance functional consultant of Microsoft Dynamics 365 Finance and Supply Chain. I am a Microsoft certified professional MCP also. So today in this video I'll discuss about the TDS for income paid in foreign currency. So how this exchange rate will be considered in case of the TDS for the foreign payments. So there is a rule that has been came in 2023 that has been launched by the Ministry of Finance in 2023 August 17. So the Ministry of Finance has introduced a new rule that is impacting the TDS on income receiving in the foreign currencies. So this rule was came with this notification number by the Income Tax Act on August 17, 2023. So let's deep down about this act first, then we'll see how this will be configured and processed in Dynamics 365 Finance and Supply Chain. So let's talk about the key changes in the exchange rates for TDS calculation. So the first thing, before 2023, there was not a standardized exchange rate for TDS calculation. So people were using the exchange rate based on their convenient, and they convert their foreign payments TDS in the uh, convenient exchange rates, and then they make the payment to the government of the TDS liability. But after 2023, this rate was standardized by the telegraphic transfer buying rate. So there is a telegraphic transfer buying rate that will be used for conversion into INR of the TDS amount. This is applicable only for the TDS, that is foreign payments TDS only, not the INR TDS payments. So this TT buying rate on the date of tax deduction will be determine the INR value of the foreign income. So we'll see how this telegraphic transfer rates can be configured in the Dynamics, and it calculates the TDS amount on this rate only. So if we talk about this TT rate, so if you see, there is a website has been launched by the government of India. So this website is launched in 1st Jan 2022 onwards. So this website is specifically to show the exchange rates used for different purpose. So if you see here in the first column, TT buying rate, this is telegraphic transfer buying rate. So this rate is used to transfer the TDS USD payments TDS to the INR, and that TDS liability then will be paid to the government of India. So this is a website that has been launched. If I click on this, it will land it to me that website. So this is a website link. You can go and check about this website. So this website is launched only for this purpose, to provide these exchange rates. Now coming to why these changes has been made by the government. So first, as I mentioned, there was not a standardized exchange rate for foreign payment TDS. So that's why it is launched, to make it standardized. So, and to reduce the mismatches, because everyone will be following the same exchange rate that is published by the uh, government, that published by the SBI rates, and it improves the compliances also, and minimizing the disputes regarding the TDS payments. So this was the agenda. Now I'll go to the Dynamics and show you how to configure this in Dynamics, and how with one more transitions I will show that how it works. Okay, so first, if you see the functionality in journal ledger form, you might have noticed there is a TDS import exchange rates. So this exchange rates will be defaulted by here. So based on this exchange rate type, whatever exchange rate is defined in this exchange rate, it will be picked at the time of making the foreign payment TDS transactions, and it will convert the TDS USD TDS amount to INR TDS amount with this exchange rate type. And the invoicing part, that is the expense part and vendor's liability, will be converted on this exchange rate, accounting currency exchange rate only. So this will be used only for the TDS exchange rate conversion. So first let me show you the exchange rate of this. How for the TDS exchange rate, it is, I have defined for USD to INR, it is 60. And if I go to the accounting currency exchange rate types, so for this USD to INR I have defined 56. So this is my regular transactions liability or expenses booked on this exchange rate, and the TDS will be booked on the 60 conversion rate. So this is the first setup that we have to do on the ledger form. We have to create two different exchange rate type, one for the accounting transactions, one for the TDS specifically. So now the second important setup we have in general ledger module in the parameter, we have a boolean called custom in sales tax. This boolean we have to make it enable, because based on this boolean, if this boolean is enabled, you might have noticed on the vendor master we have the foreign vendor boolean. Here if you see, we have the foreign vendor boolean. So this field will be visible only if I have made this custom button as yes in the GL parameter. So I have to make it yes because this is the foreign payment that we are going to test. So we have to make it enable. And for example purpose, I have taken this vendor V00006 and made this foreign vendor as yes. So now let's book an expense with this vendor and see the financial impact of this. So I'm going to create a purchase order with this. Click on new. I will select the same vendor that I have marked as foreign vendor yes. So if you see, I have selected this vendor, so this import order become yes. So this is not actually an import order, but this is a foreign invoicing or foreign payment. So TDS, you might have heard that TDS is calculated on invoice or payment, whichever is earlier. So right now we are booking the invoicing part, and we'll see how it converts the TDS amount, what exchange it is picked. So I'll mark it as import order as no, because this is not an import order. You can ignore these fields because these are the some custom fields. You can ignore this. Okay, so let me click OK. So this purchase order is created. I'll be taking one quantity, one unit each. Let me take 1000. So TDS is already mapped. I'll click on save button. Let me check the GST if it is applicable on this or not. Okay, it is already mapped. So withholding tax, I'll check the withholding tax, how much it is coming. So it is 200, it is coming, fine. And on header, if you see that import order boolean, you will find here also import order is no. And the most important thing, the thing that we have to change, which is my currency, because this is the USD payment, not INR. So I have to change. Ideally, this currency is pulled from the vendor master. So if this vendor is a foreign vendor, so that foreign vendor will be having the USD by default. So it will come as default. No need to change again and again. Okay. So this is USD is fine, and here I have to take unit price as 1000 USD only. Save. So it is saved. Cross check. Okay, so now I have to confirm the purchase order and go with the invoicing. I'll book a direct invoice. I will not make any GRN because this is a service item. You can ignore this. This is just a warning message, custom warning message. Okay, now I'll go to the invoice and do the invoicing. Let me go to the demo 3 demo 4 invoice. Let me press today's date, and line is not coming. That I have to change as ordered quantity. Okay. Okay, so this 1000 is coming. Fine. Now these are few things which are mandatory as per the custom logic, so we can ignore it. And if you are aware with this feature that on purchase order invoicing we are also having the workflow, standard workflow. So I have enabled this standard workflow. So once we submit this workflow, it go to the vendor pending invoices. I'm opening it from the vendor pending invoices. So I'll approve it and post it. Let me view the accounting before posting. What will be the accounting impact? See, so this will be the financial impact after posting the invoice. So I'm not going to post because it is going through the workflow. So after posting, it will be posted like this. So first, if you see, here we are having the USD transactions, and vendor balances is, that is, let's keep it aside first. We'll see the GST part first. So the GST is 90 and 90, that is 180. And withholding tax, if I talk about the TDS, which is 200 was coming. But if you see in the this is my transaction currency, debit and credit is the transaction currency, and this is my accounting currency, which is INR. So we'll see the conversion of this. Reporting I'm keeping aside, it is also the INR. So if you see the TDS ideally we have seen the TDS exchange rate was 60 USD per 60 INR per USD. So this, if we convert with the 60, it will become 1200. So it has taken the exchange rate of 60, that is TDS exchange rate. And if we talk about the GST, what rate it has taken for GST conversion? So 90 for accounting exchange rate type was 64. So if I show you, so this has been converted to 54. Let me open the calculator so that you will be better understand. So this is my 90, and as per my regular exchange rate, that was my 56 exchange rate. So with this exchange rate, it is coming this. So for the GST part, it is taking this exchange rate, regular exchange rate. But for TDS, it has taken the exchange rate that is defined on the here on the general ledger form. We have defined this TDS exchange rate type. So for TDS, it is picking this exchange rate. For other, it is taking this exchange rate. Now coming to my same page. Now, so we have seen the GST part conversion and the TDS conversion also. And this is the expenditure of 1000. It has taken also 56, that is the regular exchange rate. Now coming to the vendor balances, how it has calculated the vendor balances. So vendor balances is nothing but vendor balances is nothing but a expense, that is 1000 plus GST 90 180. So 1180, and about this we'll subtract 200 as TDS. So this is actually the balance amount is my vendor liability. So expense amount plus GST minus TDS. So that's why it has shown these two lines, vendor balances and vendor balances two lines. This first line is deduction of the TDS, and this line is about the base amount, expense amount plus GST amount 90 180. So if I say the 1180, how what exchange rate it has taken to convert? 1180. So if I multiply it with the our regular exchange rate, it has taken this exchange rate. So you have seen that for posting of the invoicing, it has, for TDS it has taken this exchange rate, but for other parts it has taken the our normal accounting currency exchange rate part. So this is the one of the requirement from the clients, or this is not the actually requirement, but this is the legally compliant things that we need to take care about the foreign payments. When client is making any foreign payment, in that case they need to convert the TDS exchange rate in a telegraphic transfer exchange rate. Otherwise, what clients do, client manually calculate the TDS amount, TDS liability into the with the telegraphic transfer rate, and then they file the TDS returns. So to avoid the compliances, to avoid the disputes of TDS payments, we have to configure this TDS as a default payment if there is any foreign payments. This feature is for the Indian localizations only. So okay, so this is the entry that I have also posted here, the same thing. So that's it for this video. So for more such informative videos and tax related or Indian localization related things, you can follow me on my Instagram. I'll keep posting this videos and the PPT and the content. So do follow. Thank you so much for watching this video. Have a great day.